What's up, guys? It is Friday, January 13th, and this is the crypto newsletter. So there was some news that I missed yesterday, like China. China includes digital yuan in cash circulation data for first time. So things are heating up on the CBDC front, man. Like the digital yuan ECNY represented 0.13% of cash and reserves held by the central bank. The People's Bank of China included the country's digital currency in calculations of the amount of currency in circulation in December. First for one of the early adopters of CBDCs in the world's second largest economy, according to data released by its central bank on Tuesday. So we're seeing that on the CBDC front, things are heating up. And as you can see, with China doing this is huge. They're the second largest economy. So the US is sitting back, they're at the round table, they're in meetings with each other, they're looking at this and they're like, shit, guys, we got to hurry up because China is about to take the lead. They don't want that to happen. So we're going to start to see the other countries follow suit to catch up to China. So starting from December 2022, ECNY in circulation has been included in the amount of currency in circulation. We can see cash and bank reserves held by the central bank, a measure of money supply known as M0, grew at 15.3%. China was among the first countries to develop a CBDC, entering into projects with other nations in the Bank for International Settlements, an association of 61 central banks from around the world. Its pilot scheme involves as many as 26 large cities and 5.6 million merchants, according to a report by the South China Morning Post. There we go. So things are heating up on that front. Another huge piece of news, Goldman Sachs. Goldman Sachs tokenization platform GSDAP, leveraging DAML, goes live. So the European Investment Bank is the first to leverage Goldman Sachs' new digital asset platform, issuing the first fully digital bond on a private blockchain. Guys, the institutions are adopting this and they're piling in. There is no reason why cryptos, if we're talking about the prices and these certain cryptos that we know are powering these platforms, right? There's no reason for them to tank and go to zero. All we're seeing is on the fundamental side, traction, adoption, institutional money. They're pouring into it, while on the front end of everything, all you see in the news, FTX debacle. All you see is Genesis and the digital currency group dilemma. But meanwhile, they're releasing these news articles, they're casually throwing them out like it's nothing. This is absolutely huge. Goldman Sachs recently announced that the bank's new digital asset platform is live 1 year into their engagement of digital asset. The past few years have been transformational for blockchain ecosystems, with the technology's ability to solve real problems for financial institutions being validated. Goldman Sachs digital asset platform is developed on top of digital assets DAML smart contract language and Canton, its privacy-enabled blockchain. DAML-based tokenization platforms such as GSDAP capture the full complexity of rights, obligations, and cash flows throughout the life cycle of assets. They can also make the digital representation and workflow accessible and fully automatable across distributed, interconnected ecosystems of participants. Additionally, digital asset ensures that data is only shared with entitled stakeholders with its privacy protocols, while supporting the scalability necessary to connect assets globally. Our goal from the outset has been to help our clients realize the benefits of end-to-end digital lifecycle processing across tokenized assets, digital currencies, and other financial instruments. We are pleased to bring this DAML-based solution to market and continue to find efficiencies that will improve the velocity of transactions. For example, by reducing the typical bond issuance settlement time for the European Investment Bank from T plus 5, transaction plus 5 days, to transaction 0 days, the same day, at a speed of sub 60 seconds with cross-chain atomic delivery versus payment settlement in this inaugural issuance, we show how transformative this technology can be to the financial markets. Absolutely nuts. You're talking about something that takes 5 days, taking only 60 seconds. We're talking about game changer stuff that is going to fundamentally transform the financial system to a T, and it's happening as we speak. It's been planned for years. It's been being developed for years. There's been private boardroom meetings, roundtables, handshakes, and now we're seeing it go live and publicly being announced. It never was like this. For people that are new into the space, seeing this, it's kind of if you were in it for a while when all these people, Goldman Sachs, JP Morgan, were saying, yeah, it's a scam, stay away from it, all these things. Like, this is truly, it's hard to believe, but now it's here. We're seeing it publicly being stated. The past few years have been transformational for blockchain ecosystems, with the technology's ability to solve real problems for financial institutions being validated. Goldman Sachs has taken the right approach to tokenization and the underlying blockchain technologies necessary to support this new market. As an early adopter of the technology, Goldman Sachs is paving the way for the future of financial services. We are excited this platform has reached the market and look forward to its continued evolution. There we go. There we go. And digital asset is one of those, and in the course videos, if you haven't already, the link will be in the bio. Come to stargate-ventures.com. We closed down access to our services as far as the signals, the trading indicators and everything like that. So you can join our free waitlist here if you want to get on that. But if you want to get education and kind of get caught up to speed with the past 7 years of what's been going on, then get over to the education here. We have like tons of educational videos, over 300 plus videos that are fire. They're the best out there. And in Agartha here, we talk about all this stuff. So in one of the programs here, or one of the missions, we talk about consortiums, organizations, kind of like groups to watch. And digital asset is one of them, along with R3, along with Hyperledger. So digital asset, we can just take a look at it. They're one of the big boys. They're one of the consortiums that you want to keep your eyes on. And for the crypto assets or the blockchains that are working alongside with digital asset, they're going to be adopted by, I mean, you can look at all these companies down here, huge companies, huge institutions. They're involved with it. So there we go. Now let's keep going. So most banks' crypto efforts undeterred despite choppy waters. No kidding. So TradeFi banking giants, including BNY Mellon, have an opportunity when it comes to cultivating customer trust after FTX's fall. Bad news for crypto is not necessarily translated to bad news for banks with digital asset aspirations. At least one TradeFi player is set to ditch its crypto division, but its competitors aren't pulling the plug as quickly, despite a volatile market environment and regulators amping up crypto scrutiny. Banking giants, including BNY Mellon and Fidelity, that have deepened their crypto pushes do not appear to be reversing course. We're just having a pause while the situation from FTX gets resolved and people understand what went wrong, how we prevent that going forward, and then who are the established players where people can have trust. Right? So oversight is happening. We're going to see regulations kick in because of the FTX thing. And we're going to see now institutions adopt and offer these services, the Fidelities, the BNY Mellons, the Bank of Americas, the Goldman Sachs. And it's going to be familiar. It's going to be comfortable to the mainstream that haven't dove into the crypto market yet. It's so much easier for someone who already has a 401k at Fidelity or a brokerage account to just buy crypto in there than it is to transfer to a sketchy exchange that is based out of the Bahamas. That, you know what I mean? So like, this is where things are headed to. It was the narrative that was set at the end of last year was the perfect layup for what's about to unfold in 2023. If we start seeing some of these things get kind of cleared up and kind of figured out right away, like the FTX dilemma, the Genesis stuff, we start seeing regulations come in. We start seeing more offerings and products and services being offered from these legacy institutions. I would not be surprised for us to really melt up. We could see all-time highs this year. We could go back to all-time highs this year if that narrative pans out how I just laid it out for you. Crazy stuff, man. I'm excited for it. I hope you guys are too. So if you haven't already, click the subscribe button, hit the notification bell, get updated in real time, because there's a whole lot of news, whole lot of market stuff going on. And when we release videos, we're trying to do 3 a day. So you want to get those right away. So definitely hit the subscribe, hit the notification bell, and step through the Stargate with me. So let's keep rolling here. So then we got this. We got, what is a digital pound really useful for? So I guess this is a live webinar coming up. What is the digital pound really useful for? Ripple, CGI, Billion, Worldline, Modular, and Soda. This is going to happen January 26th. Aside from simply digitizing our national currency to bring it in line with the modern world, what is a digital currency actually useful for? How would a digital pound make a concrete difference and add value to the way things operate today? Various benefits are put forward for CBDC and new forms of digital money, including delivering more efficient payment mechanisms, promoting financial inclusion, digitizing trade, and so on. In this webinar, we will hear from a range of practitioners who are piloting or implementing real-world use cases for a digital pound and debate with a panel of experts around where CBDCs and privately issued stablecoins can really deliver on these goals. So that's going to be interesting, January 26th. we'll have to keep that on the radar. Now let's go here because we have on-chain treasuries, bonds, new options for investors searching for safe havens. The launch comes as investors look for more lucrative places to park their funds on the heels of tumultuous year for crypto markets. For stablecoin holders searching for risk-free safe havens, there's one fresh option on the market: Ondu's Finance new tokenized US Treasury bond and offerings. As of now, the fund is set to be split between 3 separate tokenized share classes. Each share class invests in a single short-term US Treasury and bond exchange-traded fund managed by institutions like BlackRock and PIMCO. Minimum investment is 100,000 USDC under a management fee of 0.15%. So this is what we're seeing. We're seeing a total restructuring and rewiring and redevelopment of the plumbing of the financial system. And there's going to be ways of kind of tokenizing certain sorts of value and just ways of making money as an individual or as a creator that wasn't even possible before blockchain and crypto and all this. So interesting and opportunistic times ahead, that's for sure. So then we got this: the blockchain is finally fixing cross-chain bridges. So much has been written about the importance of blockchain interoperability, which refers to the ability of 2 or more independent networks to exchange data and value. It's a fairly straightforward concept, but it's one that has proven extremely elusive in the real world. However, it is absolutely necessary to implement if blockchain is ever going to live up to its full potential. The open and decentralized nature of blockchain has resulted in an explosion of networks. Today, there are easily more than 100 blockchains up and running, and they all exist independently of one another with no way of communicating. Because these networks can't communicate, it's impossible for a user on the Bitcoin blockchain to interact with someone on the Ethereum network and vice versa. In an interview with Bitcoin.com, Newsflare Network co-founder Hugo Filion highlighted the problems this lack of interoperability causes and how it places a major obstacle in the way of mass adoption. He explained that while DeFi has become the biggest use case of blockchain today, it is severely handicapped by the lack of communication between networks. The lack of adequate cross-chain communication has constrained the size, participation, and efficiency of the DeFi market. Not only have existing designs resulted in the loss of billions of dollars of capital, but they are also hard to use, limiting participation of more sophisticated users. As a result, market size, liquidity, and returns have been constrained. So why can't blockchains talk? It goes into the problem. And that's what Flare is solving. It's solving the interoperability problem. So why this matters: if Flare is truly able to solve blockchain's interoperability problem, it will have massive implications for the wider DeFi industry. He points out that around 70% of the current total market cap of digital assets is composed of non-smart contract assets, such as Bitcoin, XRP, Dogecoin. If we're able to bridge these assets to smart contract protocols, it would provide a clear and massive boost in liquidity to the DeFi market. While decentralized applications would have access to a much larger available market, while token holders will have decentralized access to those dApps. Moreover, by on-ramping non-smart contract tokens to chains like Ethereum, it creates an alternative payment rail for those assets. We believe that Web3 needs greater scope, utility, and consumer appeal through sufficiently decentralized and reliable communication protocols between blockchains and non-blockchain networks. We want to enable tokens like Bitcoin to be used with these applications. Flare believes it has solved problems of blockchain interoperability. Flare believes it has solved the problem of blockchain interoperability, and it's a project that is now being taken very seriously. Later this month, Flare will hit a big milestone with its initial token distribution event, and the project has gained the support of numerous cryptocurrency exchanges that will distribute its Flare token within 2 weeks of its launch. It's a serious solution that has gained some serious backing, and that makes Flare one to watch in the months ahead and for 2023, that's for sure. Then we got this. Bitcoin CME futures draw premium for the first time since FTX collapse. Ain't it crazy? Like, the news was just saying, oh, the biggest discount on CME futures. Like, is there a future ahead for the Bitcoin CME, and all that? And now all of a sudden there's a premium, right? So always do the opposite of what they're pushing. So that's crazy that it flipped that fast. So there we go. And then crypto markets analysis, early signs of higher volatility, maybe creeping into Bitcoin and Ethereum. That's for sure. And we're seeing some of that volatility play out. Then we have Hong Kong to propose a approved set of crypto tokens for retail trading. The CEO of the Hong Kong security regulator said only highly liquid assets will be on the list. So that's maybe one way they're going to be able to drain out all the 99% of the cryptos besides the top 1%. they're going to only allow retail trading in a select group of cryptos that are highly liquid and give them that regulatory clarity. That ultimately will just kind of have all the 99% ones fall off the cliff, because with the big pools of money, the institutional money and the retail money only being able to go into a select set of cryptos that are, highly liquid and have other rules or frameworks to kind of go about that asset listing, those are the ones that will be adopted, and those are the ones that are going to soak up a ton of money. So only highly liquid assets, and we all know XRP is very liquid. That's what they've been kind of aiming to solve, was to have a highly liquid pool of XRP, like to be able to swap in and swap out very quick without having a change in the price. So XRP may be one of the most liquid digital assets for sure. They have the liquidity hub, right? So they've been focused on that since the jump. Now let's go into this. We got 5 UK associations form crypto alliance to steer digital asset regulation. The UK Forum for Digital Currencies, which includes City of London Corporation, also aims to further the country's crypto hub ambitions. So 5 major associations coming together. It includes the City of London Corporation, Digital Pound Foundation, the Payments Association, and lobby groups, the City UK and UK Finance. The UK's Financial Services and Markets Bill, which is set to give regulators in the country more power to regulate crypto, including stablecoins, is set to pass by April. Plus, the UK government wants to launch a consultation in the coming weeks regarding what other regulations need to be put in place for the sector. Policymakers have been calling for more regulation following the collapse of crypto exchange FTX. The group wants to be a crypto hub. It plans to both mitigate actual risk plus alleviate the perceived risk of crypto through education, like kind of what we're providing, and will facilitate discussions between the financial services industry and crypto. While there are risks, the UK FTC recognizes the growing interest in the adoption of new forms of digital money across the globe, and how it will open up many opportunities for the UK to remain competitive in fintech while leading the financial innovation with the right regulatory framework. There we go. All right. Then in other news, breaking, Bitcoin miners have stopped selling and started buying. That's usually very, very bullish. So that is good to see. And then you can see El Salvador passes law paving the way for volcano bond, the MELTA. So the digital asset bill in the Legislative Assembly attained 62 votes in favor and 16 against. They're going to do a issuance of a Bitcoin-backed bond known as the volcano bond. So in November 2021, El Salvador president announced that the Central American country, which earlier the year established Bitcoin as legal tender, was planning to raise $1 billion via Bitcoin-backed bonds. The proposed paper soon became known as volcano bonds, as the money was to go towards, among other things, seeding a Bitcoin mining industry reliant solely on renewable energy, including that generated by the country's active volcanoes. So there we go. And that goes into kind of what this is about. Oregon weighing crypto miner carbon crackdown. Oregon was once a hotbed for crypto miners. A new bill is the latest blow against them. So now we're going to see a crackdown on these energy wasteful kind of consensus mechanisms. So crypto miners and related entities could soon be required to adhere to an uncommonly stringent set of restrictions around their energy use. The measures, largely an outlier in the U.S., stem from a bill submitted to Oregon's legislature on Wednesday. New York has been one of a handful of other states to impose strict standards on miners of Bitcoin and other proof-of-work crypto assets. So the proposed new baseline is set. So it's the carbon CO2 tracking. We already know that has been XRP, ZANJ, United Nations, right? The carbon credit solution. That like this is the agenda, right? We got the SDG, Sustainable Development Goals, 2030. We know the narrative, we know the game plan, and we know which ones to stay, which coins and which protocols to stay away from, which ones to go heavy in. So that is just more confirmation there. All right, and to end it off, crypto is the Wild West, Gensler tells U.S. Army. Most of these 10 or 15,000 tokens will fail, like we were just saying earlier in this video. The latest audience to Gary Gensler's long-running crypto skepticism, the U.S. Army. When it comes to speculative assets, which includes digital ones and the newest iteration of the SEC chair's crypto critiques, Gensler remains skeptical as ever, as he said during a Twitter Spaces hosted by the Army on Wednesday. In a session branded as financial advice for U.S. service members, Gensler said most cryptocurrencies lack proper regulatory compliance and use cases. There's no framework that he set up, though. The crypto industry is the Wild West. Once again, it's easy to get caught up in FOMO swirling around the sector, or at least fear of missing out that it was prevalent before the bear market. Traders and companies should proceed with caution, Gensler said during the Spaces, as most currencies are not currently abiding by the law. Most of these, again, are not compliant with the securities law, but they should be. He doubled down on his previous comments, saying that the value propositions of digital assets is just not there, not true. Most of these 10 to 15,000 tokens will fail. That's because venture capital fails, new startups fail, but also because history tells us that there's not much room for microcurrencies, meaning, we have the US dollar and Europe has the euro and the like. So the classification of FTT, so given that most crypto tokens are securities, it follows that many crypto intermediaries, whether they call themselves centralized or decentralized, are transacting in securities and have to register with the SEC in some capacity. So there we go, out against Gensler. Okay, so that's it, guys. That's it for the crypto newsletter. I will see you guys in the Discord. If you haven't already, click the link in the bio, come join the Discord. Also, subscribe, hit the notification bell. And if you're interested in the education, go over to stargate-ventures.com. You can fill out the waitlist as well, too, right on the homepage. We do have a waitlist as far as the software goes and the signals and the automated signals in the Discord. So you can fill that out there if you want that. But if you want the education, you guys got to step into Agartha. It is fire and it has jam-packed over 100 videos. It's going to set you up with the knowledge that you need going into 2023. So get yourself over there and I'll see you guys in the next video.